welcome to the first official episode of the RSEB podcast. So this podcast is designed to give more information about the stock market and how shares and the capital market really works. So with that being said, my first guest today is Mr. Bijoy Chettri, who is also the head of IT, right, in RSEB. So we're going to be getting more insight from the man who's behind the technology here in RSEB. So with that being said, hello Bijoy. Thank you.
Hi Tom.
Welcome to the first episode.
Hi.
So my first question I want to ask is basically, this is for people who really don't know much about shares and mainly about what RSEB actually does. So when people ask you like what do you do for a living and what is RSEB, what do you usually say?
Firstly, I'd like to give you what a capital market is.
Mm-hmm.
So capital market is a place where long-term debt, which is also known as bond or equity-backed securities, also known as shares, are traded, and it consists of primary and secondary market. Primary market is basically where the shares are floated for the first time and then subscribed by the investors, and the secondary market is the market where the further trading of shares takes place. And capital market also efficiently mobilizes the fund within the economy of the country.
Okay, so where does RSEB come into this?
So RSEB actually is the capital market which supports capital market. So it's the stock exchange. It facilitates all the rules, regulations needed to buy the shares, sell the shares, and how trading takes place, how the prices are determined, and who all are allowed to act in behalf of their clients, the brokers, and all those things are taken care by the stock exchange, the RSEB.
Okay, so another question is when a company first floats the shares, it's called IPO, right?
IPO, yes.
So can you give us a little detail on the process of what IPO is, if someone who doesn't know what IPO is?
Okay, so the IPO or the initial public offering is when a company decides to float the shares for the first time in the market for the investors. So what happens is usually the company selects a brokerage firm which will take care of the IPO. So the brokerage firm will float the subscription forms. So it will be available for all the general public. So the public will get the subscription form, fill up all the details, their KYC, everything, and then they will also include what is the amount that they want to subscribe. So they will just fill up all those forms and then give it to their brokers, and it can also be done online for those who has access to the internet. So once that is done, the IPO engine that the stock exchange has, the RSEB has, will determine how many subscription was there and what was the available volume that was floated for the public during the IPO. Based on that, we have an algorithm which will equally divide among all the shareholders and the subscription. So once that is completed, we generate report and send the information to the broker, and then it will further pass down to the investors who have subscribed. So that is the basic process how it's done actually.
Maybe can you share like a company experience who recently became an IPO public company? When was the last time it happened?
The last IPO that we did was in 2018, 2019, which was for the Sherja Ventures Limited. So that was the last IPO that we recently conducted.
Okay, so during that process, was it exactly how you mentioned it right now?
Yes, the process is same. The broker was identified, and then the broker publishes the subscription form. The users or the investors, they look at the subscription form, fill up the form, and then whatever amount or the units of shares they want to subscribe, they fill the form and give it to their broker. And once the subscription date ends, the allocation is done, and then they get the report of the holding that they have in that company.
Okay, so if one was to, let's say example, they have participated in the IPO, they have subscribed for the shares, like how do you check? Do you need like a certificate? Do you need like a document? Do you need an app, or how do you check if you have shares?
If you want to check whether you have shares or not,
yes.
So what we can do is the stock exchange has is a central depository system, which is a depository, which is a repository of all the shareholders of all the listed companies in Bhutan. So it has the details of all the clients and what shares of which companies that they hold. So they can inquire with us, or they can get in touch with their broker to get the details.
Okay. So now that we've touched a little bit of primary market, can you give us a little bit of information of what the secondary market is?
Okay, secondary market is once the primary market completes, and if you want to turn your shares into liquid, in a sense that you want to cash out, or if you want to get more shares, that is when the secondary market comes. So further transaction of shares, buy and sale of shares, takes place in the secondary market. So it's an open market for all eligible Bhutanese who are 18 and above. So they can open an account with the broker, and then they have the access to the market. So if they like a company ABC and they find a good prospect in that company, they can just place a buy order.
Okay.
And then buy order, when they place, they have to see whether their price is within the range that is determined based on the supply and demand in the market. So once they place the order, if there are any matching orders, for instance, if you want to buy the shares at 50 Ngultram per share, and there is someone who is willing to sell at 50 Ngultram or less than that, then you become eligible and then you get that shares. And similarly, it works for the sale orders as well.
Okay, so when you mentioned we have to, depending on the demand and supply, so how does, let's say someone comes in here and asks, I want to put an order, I have no idea, how would you recommend they use maybe the table in order to put the right order? Or will the broker be guiding them through this process?
Broker, usually they will give some kind of financial advice to the investors, but we have investors who look at the annual reports of the companies, how they are performing, and based on that they put their judgment and then place the orders. So what will normally happen is that the order book that we have in our app and in the website is also cumulative of all the different orders from different individuals of that company. For instance, if you see an order book of one company, there will be about hundreds, maybe sometime 500 orders that are accumulated. So what happens is all the buy orders and sell orders are accumulated, and based on that, for instance, the preference will be given for the buy order. If someone is willing to buy at a very high price, then everyone who has placed order less than that price will be accumulated at that price, that top price.
Okay.
And for instance, let's say there is A, B and C client,
okay,
who is willing to buy at 10, 11 and 12.
Okay.
So 10, 10, 10 each volume. So the cumulative volume is 30, right? So someone who is willing to buy at 10, the cumulative volume will be 30. The cumulative volume at 11 will be 20, and cumulative volume at 12 will be 10. Because if the guy who is willing to buy at 12 is getting the same product at 10, he will also be included in that price,
okay,
10. So that is how it works. And similarly with the sale also, it's the same process. So how the trade will take place is when there is a matching volume. For, let's say, if there is someone who is willing to sell at 10 and the volume, the maximum volume at which that price will trade, then that will be the price at which the transaction will take place. To simplify, for instance, if there is a trade at 10 Ngultram per share, right?
Okay.
And there is someone who is willing to buy 50 shares at 10, and then someone who is willing to sell 50 at 10, and then there is someone who is willing to sell 60 at 11, and then 60 again at someone who is willing to buy 60 at 11. Then the price at which the transaction will take place is the 60, that 11, the 60 volume, because 50 is less than 60.
Okay.
So that is how the trading mechanism will take place.
Okay. So somewhat like a tiebreaker, is it?
Yes, if there is a tie.
Okay.
If not, the price at which there is a transaction, that will be the market price.
Okay. So now if I, let's say, wanted to, I have no trading account or any knowledge, but now that I know that information of how it works, how do I start trading today?
So if you are a first time trader who is willing to buy the shares, so what you will do is you will find a authorized broker.
Okay.
So you can get the details from our website. So we have around 9 brokers who are authorized, who are certified and authorized to act on behalf of their clients. So you go to them, you fill up a form, they will do your KYC. Once that is completed, you will get an account number, which is in terms of bank, you will get a bank account number. Similarly, you will get a central depository account number, which will hold all the details of whatever shares that you will be buying in the future. Okay. So with that account number, they will place the order on behalf of you, or you can get an access to the MCAMs from where you can place your own order. But behind, in the back office, the broker will be providing and managing all your financials. You only have the flexibility to place the orders or update the orders through MCAMs.
Okay, so you can use the app as well
yes,
as...
you can authorize a broker to place your orders.
Okay, so when you authorize the brokers to place the orders, you have to meet them physically? Is that the case? You have to sign a pen and paper form? Is that the process?
Yes, there is a process. You need to fill up form. You need to register yourself in the MCAMs, where they will verify first whether this is your client or not. And once that is done, and the next level of verification takes place at the stock exchange, the RSEB, where we will approve. And then once that approval is done, you will get a credential with username and password, and you can log in to the app and then place the orders.
Is there a way of doing it without the app?
Without the app, you can instruct your broker.
Okay.
So
whether it be email,
email, WhatsApp, or text, yes, or call over the call.
Okay. Yeah. So one common question I usually get from people who do trading or interested in trading is they always ask, is the broker required? Is the broker required? Can we do it without the broker? So we know the broker is required. So why is that case such as?
Currently, the broker is required because you see, when you place the orders in the market, there are thousands of people who are willing to buy and sell. And to accommodate all those things, though we have technology right now, but there is a risk involved as well. Okay. Because the primary function of the broker is to mitigate that risk. So what happens is, someone who is willing to sell and someone who is willing to buy, the person who is willing to buy will place an order, but all those fund transfer from one client to another client is all taken care by the broker. So in case of default, the broker is liable. So all those risk mitigation is there.
So it's there for risk mitigation and also maybe for a seamless transaction.
Yes, process. And also there are many who are new to the capital market, and the broker, they provide all these advices for them, how to place order, what is the next step that they need to do. In case of dividend payout, also they assist them, and if they want to update their bank accounts to get the dividend on time, all those things are taken care by the brokers.
Okay, all right. So let's say I get with the broker, I sign up, I do all this process, and I do a trade, be successful. How is the payment process? When do I get the share?
Okay.
Do I get in a piece of paper certificate? How does that work?
So earlier it used to be in the paper format. Okay. So now it's all DMAT. Which means it's all computerized. Okay. So what happens is, when there is a trade that gets executed. So let's say today a trade takes place. So the settlement cycle that we follow, and it's standard all over, is T+2. So T+2 means 2 days after the trading, the settlement takes place. So whoever is selling the shares will get the cash, and whoever is buying the shares will get the shares in their name in the depository. So usually within the 2 days, all those settlement will take place.
Okay. I'm also aware that there's a commission, right?
Yes.
So this commission, can you expand on the commission?
So usually the broker, they charge a commission within the range of 0.5 to 1% of all the transacted amount from their clients. So this commission is for all the back end work and the maintenance cost that they have, all the administrative costs. Everything is covered by that commission, which is charged by the broker to their clients.
Okay, so it's charged to the buyer and the seller?
Yes.
So it's charged both?
Yes.
So it's, let's say, up to 1% to the buyer and again 1%
to the
so it's
seller.
1 from
Yes.
there, right? So why is it 1% though?
So it's defined by the rules, but they have the negotiation with the client where they can come to 0.5 or 0.6 based on the frequency of their clients. If they are a frequent trader or a high net worth, they can negotiate, and if it's just one time, they usually charge higher rates to the client.
Okay. All right. So now let's say we've gotten the shares, we know how it's traded. Now, what is the advantage of actually buying shares? What is what do you call like the benefits of being a shareholder?
Okay. You see, shares are one form of investment. There are different form of investments, right? You can invest in real estate, you can invest in gold, you can invest in other things. For instance, you can put your cash in fixed deposit. But shares in particularly, you do not have any limit. Even if you have 1,000 Ngiltram or 2,000 Ngiltram or 10,000 or a million,
okay,
you have that flexibility to invest. There is no restriction.
Yes.
And moreover, it's very portable in the sense that, like land, it's very difficult to manage, right? You have taxes to pay. If it is left bare, then there's no income from it. And then even for the houses, you have maintenance and everything. In that sense, I think shares, it's very easy to manage, and you don't have any restriction on the amount that you put. And moreover, you become a part owner of that company. It's like owning that company. So over the period of time, you can just keep on accumulating the shares and become a majority shareholder. That is also there. And there are incentives like bonus, dividends and rights, where you can get a good kind of return. So all those things are there.
Okay. So I think most people who buy shares, at least in my knowledge, the main thing they really look at is dividend, right?
Yes.
So as a shareholder or person who doesn't really know that well about the stock market, what is a dividend? Can you please explain?
So dividend is given by the company after all closing all their accounts, whatever is remaining, they will give it to their shareholders. So for instance, if they declare 10% dividend, so whoever is holding one share will get 1 Ngiltram on that.
Okay.
So if you have 10 shares, you will get 10 Ngiltram. So usually here the dividend is given on the face value. So how I calculated it as 1 Ngiltram. So to claim a dividend, firstly you need to have the shares of that particular company.
Okay.
And there are two important dates when you get dividends that you need to be aware of, which is the ex-dividend date and ex-dividend record date. So simply ex-date and record date. So ex-date, it gives a reference point to the shareholders, saying that if you buy shares on or after that date, you will not be entitled for the dividend. So you need to ensure yourself to buy the shares before the ex-date. And the record date is the date when the central depository will generate the list of all the shareholders who are entitled to get the dividend.
Okay, so let's say you said face value, right? So face value is 10 Ngiltram.
10
right?
Ngiltram,
10
yes.
no. So what is like the what do you call rule of thumb formula to calculate dividend?
For the dividend.
Yes, let's say if they give 10%, you said it's 1 Newton, right? So how do we get to 1 Newton?
So it's like the return on one share is 10%, which is 1 Newton.
Okay.
So that's how it's calculated.
Okay.
So if it is 1.5, then for one share at the face value you are getting 1.5 Newton. So if it is 20%, you are getting 2 Newton per share that you have invested.
Okay. So how can I, let's say I have already shares and I'm not sure whether the company has given dividend that year or not. So how do I check whether the company has given dividend, and also how do I claim the dividend?
Okay. To check the dividend, it's actually simple. You can just keep track of the announcements that are done by the companies. It will be in our website, on our Facebook page, the Instagram page, and even in the TikTok account that we have.
Maybe do the companies announce it themselves individually also?
Yes, they also announce individually. They announce usually through the print media.
Okay.
So you can the investors can check there also, and they can get all the details in one portal from our website also.
Okay.
So that is the way to check the dividend, whether the company is giving or not. And the other thing is, if you have an updated account number, the bank account number, the dividend will automatically be deposited to your account.
Okay.
Now, for instance, if you had not updated your account and if you were the shareholder and you did not get the dividend, that will be with the company as unclaimed dividend. Okay. So to claim that, the individual needs to go to the company and then update that information and claim all the unclaimed dividend. So what we have noticed most of the time is people, they come to the stock exchange and try to claim their unclaimed dividend, but usually it's the other way around. Once the dividend list is generated, we give it to the company, and the company will usually disperse it to the bank accounts of the investors. And if there was any misinformation or incorrect account number, then it will remain as an unclaimed dividend, and the investors can go to the company, respective company, and then claim it from there.
Okay. All right. So dividend, let's say I've claimed it. Okay. Is it taxable?
Yes, it's taxable if it crosses certain amount. I think it's 30,000 Newton.
Okay. So
if it is above 30,000 Newton, then it's taxable. You need to file it for PIT. Yeah.
Oh, okay. I think that's one common question people usually ask about dividend also as well. But if you just have shares and there's no dividend,
not taxable.
Okay. All right. So final thing I want to ask before we end the session is what are some common misconceptions you think people think about when we think about the stock exchange or trading in general, or investing in the capital market?
I think most common misconception people have is that it's like gambling. But if you are informed and if you make informed decision, keep track of all the AGMs, whatever is happening with the company, then you can make informed decision and buy this shares or sell the shares by timing your orders. So it's not actually a gambling market, but you have all the information in your hands. You can make an informed decision. That is one misconception. And the other thing is that it's only for wealthy people, or if you have large capital. It's not like that. Even if you have a few hundred Newtons, you can place the order and get the shares. You have no restriction. You can purchase one share or 2 shares or 1,000 shares. So you don't have restriction in that as well. And that is what I think the common misconceptions among the investors.
Okay, so just like you mentioned, is there, if I want to be a better investor, better trader, so what are some habits that I should have to do? Is that to stay on top of the AGMs? Can I read the market?
Yes, I think there are basically 2 types of investors in market. I think they are the technical investors and fundamental investors. So technical investors will go through all the data, they crunch all the information that is given in the financial reports of the companies or from the annual report. They get that data and then they try to see whether the company is headed to a right direction or not. Based on that, they make a long-term investment. Fundamental investors, they will try to see the market. They understand how whether to buy that shares on that particular time or not, and usually they are short-term investors. They will try to buy the shares at low price and then sell at the higher price by timing all those things, and they make a short-term gain from the capital gain. And there are mostly other crowd followers in our market where they try to see if someone is buying Punjab Bank or BNB and they just follow blindly.
So similar, like maybe like Ronaldo putting the Coca-Cola bottle.
Yeah.
And then the price went down.
Yeah.
Something like that.
Yeah. Similar to that. So I think the investors have all the information from our website, and I think coming back to your the earlier question, the misconception. Most of the investors, they say the company is not giving dividend or what is happening, everything.
Yes.
But they are actually the owners of that company. They have to go to the AGM. They will understand a few strategic concepts or things from the meeting. And based on that, they can make informed decision why the company is not giving dividend. Because I think once you are an owner, you are in for long term. You are like an owner, like you will be part of the team who will be growing that company.
Yes.
And not just taking out the dividend or the cash, right?
Yes.
So there are different types of investors, but ultimately you are the owner of that company. You need to follow up on the AGM, see what is going on, and everything is there.
Okay.
So I think they have all the tools and information that they can see and utilize and then make informed decisions.
Okay, I think it's a very educative answer you gave us. Thank you for that. And I think it's just to add on what Sir Bijoy has mentioned. I think every investment correlates with risk and reward.
Yes.
So what's the word? No, invest with knowledge, because just as prices can go up, shares can go down, right?
It makes me think of one the word. We used to say to the investors that to earn, you have to put L in front of the earn. So it becomes you have to learn and then earn.
Okay, I think with that being said, it's a good way to end the session. So thank you all for watching and listening. If you're on just listening to the audio, and also I have to thank Sir Bijoy for taking time and explaining us about these common things about the stock market and how to trade. And then finally, if you want to know more about the capital market and RSEB in general, we have content on all social media platforms, including Facebook, YouTube, Instagram, and TikTok, where we have short videos and reels about all these aspects of the capital market. Also, usually on Friday we have a live session where we'll touch about the things we just discussed today, and also so you can catch us on for that session. You can watch updates for that session. Usually it's always the last Friday of every month, and if not, you can always call RSEB's office number and get into touch with anybody here. Maybe they'll refer you to a broker and you can start your trading journey today. So with that being said, it comes to the end of our episode. We will come back again for another episode of the RSEB podcast. So everybody, thank you for watching, and stay tuned for more updates.